So aside from producing these YouTube videos, the majority of our time goes into creating content for our premium subscribers, the people who pay the bills. One of the artifacts that we produce is a tech stock report. It's got 87 pages covering various stocks that we're either holding or we're thinking about holding or we think should be avoided. And in the thinking about holding section, we call these likes. These are firms that we liked but don't necessarily own. And in today's bear market, it makes sense to go through that list of likes and see if there's any quality companies that we want to add to our portfolio. Now, we currently have 36 tech stocks we're holding, and there's a hard limit at 40, so we only have 4 open slots. And that's why we'll be quite selective about any firm that we decide to hold. But one of the companies that we had listed as a like under life sciences was Personalis, and we last wrote about them several years ago. At that time, they had a market cap upwards of $800 million. And since then, we've established a rule that says we don't invest in firms unless they have a market cap greater than $1 billion. And that's meant to reduce risk. Small firms are a lot more riskier than larger firms. So today, Personalis has a market cap of around $225 million, which means it's way off our radar. But we thought we'd take a look at it and see if any of the concerns that we had before were alleviated. And the first concern that we had when looking at this firm was the work they were doing with the U.S. Department of Veteran Affairs. And this particular program, called the Million Veteran Program, was meant to look at the impact on veterans of various things compared to a genomic population. So essentially, they're going to go through and sequence the genomes of 825,000 veterans that had enrolled in this program. Well, Personalis ended up sequencing 140,000 of those, and then the program stopped, and that was rather recently. So if you look here at the contribution of revenues from the VA MVP program, you can see 49% in 2018, and then it's moving upwards to 71% in 2020, 53% last year, and then they're expecting just 11% of total revenues to come from the VA MVP program this year, and they're not expected to recognize any revenue beyond the current order and contract. So that was, of course, the concern. When you have a key customer, they can change their mind for any reason, especially when they're the U.S. government, and then you are just left there standing, as they say, with your dick in your hand. So what Personalis has ended up doing is getting into bed with another key customer, Natera, and we'll talk about that. But here you can see how the contribution of revenues from a couple other major clients, Pfizer and Merck, have tailed off as well. And you can also see these unnamed customer A and customer B, meaning they had larger customers in addition to the VA MVP program, but they haven't been growing their revenues over time. Now, when you look at Personalis, it makes sense to separate their major customer, the Veterans Affairs Program, against all their other customers. And when you do that, you can see that as the VA MVP program revenues tail off, their margins are being compressed. So this is over the last 5 quarters, the revenues compared to cost of goods sold. You can see in the most recent quarter, margins sitting around the mid-20s. That's not very good, but it's characteristic of a services company, which is what Personalis is. Now, when we look at that breakdown that we talked about between VA MVP and all their other customers, you can see that all other customers haven't been growing as a group over time until 2021. And you can see that's bumped up. Well, 8.5 million of that 40 million there, that's attributed to Natera. So if we separate that out, we see that there's 31.5 million left, and that means that that's the remaining customers they have. So they've been seeing some growth there. That's great to see. Now, this coming year, they're expecting revenues between 62 to 67 million. And I believe about 7 million of that will be coming from the VA MVP as they wrap that up. And then the remainder is from all their other customers plus Natera. Now, If you look at the last quarter that was reported, this was Q2 2022, you can see Natera made up 38% of the revenue. So we have key customer risk again. This time it's not the Department of Veteran Affairs, it's Natera. And this statement was particularly concerning. So it says the increase of 10.1 million in revenue from all other customers during the first 6 months of this year compared to last year. Of that increase, 10.4 million came from Natera. So what that means is that they actually had all other customers decrease by around 500K so far this year. So there's a concern there. They only have one customer that's growing revenues quite strongly. So when we look at the work they're doing with Natera, this gets quite interesting because in February of 2021, these two firms announced that they'd begin working together on this particular test. It's called an MRD test. That stands for minimal residual disease, and it's looking for recurrence in cancer. And Natera, which has historically been involved in non-invasive prenatal testing, that's a theme we've never really cared that much for, they've now expanded into this particular sort of cancer testing, presumably to diversify their revenue stream. And the verbiage around the announcement seemed rather suspicious. So they say, under this non-exclusive agreement, Natera will validate the design of Signatera. That particular sentence is quite interesting. So it's not talking about how the two firms are working, collaborating together to produce a product. It's that Natera is going to validate the design of their testing assays using data from Personalis. Has sort of a temporary whiff to it. Now, ARC's analysts commented around the time that this happened, and then they didn't have anything negative really to say about this particular arrangement, though they did have some concerns as to why, and that's because when you look at this test that Natera is offering, Personalis actually offers a very similar test. So it's curious as to why they would join ranks. But the usefulness of this test is very obvious. We pulled this from Natera's homepage, and it shows how this test works. So let's take colon cancer on the left there. So people who had colon cancer and had it treated, the doctors want to know what's the likelihood they're going to relapse. So using this test from Natera, they were able to 88% of the time predict relapse with a lead time of 8.7 months. That's a lot of time in advance to begin treating somebody who you know is going to relapse instead of waiting that duration of time, then finding out and then treating. They say somewhere around 50% of relapses aren't found soon enough. So you can see here the different types of cancer that Natera is attempting to target with this particular test. Now, as we said, if you look at the products on offer from Personalis, if we just forget about the population testing they were doing with the VA, and we take a look at the other work that they're doing, you can see here they list on their latest investor deck a number of products, and one wonders why revenue growth hasn't accompanied these. But if you look at the one on the bottom there, Next Personal, again, pretty much the same sort of description as the test on offer from Natera. It's a liquid biopsy, minimum residual disease test, tumor informed. That means that they actually take tissue from the tumor and examine that to develop a particular profile for the patient, and then you can do a blood test to see if the tumor is back. And they're hoping in their most recent investor deck, they're talking a lot about how this is going to be their next growth mechanism. And you can see when they refer to 2021 and 2022 accomplishments, we found this to be rather odd. So again, the verbiage, 60 customers have placed orders for Next as of Q1 2022. Well, does that mean all time? Does that mean orders that have been placed that are being waiting to fill, or there's no color around that? This one's really bad. 9 of top 10 pharma companies have done business. How about doing business? See, this sort of past tense, it makes you wonder. Just going back to looking at, Pfizer and Merck having spent money and no longer being major customers, that's somewhat of a concern. And then they say here the commercial team has grown 100%. It's always annoying when companies or pundits say things like this without a benchmark. You don't know if the commercial team was one person and now it's two. But at any rate, you can see they talk about launching this next personal MRD offering, and then they're hoping that's going to generate a lot of revenue for them. But even if it does, there's a concern around the business model. And here, this was taken from a recent interview with their CEO that's quite insightful. And he talks about all the equipment they have. So on the left there, those are supposed to be the first 6 Illumina machines they bought. On the right, that's a machine from Ultima Genomics. Really interesting. They're a challenger to Illumina. And frankly, it's a bit concerning, though pundits are having various opinions as to how challenging it will be. It could put some pricing pressure on Illumina. And those machines, as of May this year, they had 10 that were paying pre-access customers and 7 installs. Well, one of those installs is right there. It's with Personalis. And that machine more or less allows you to sequence very cheaply. And below there, you can see some lab automation equipment from Hamilton, it looks like, and they have somewhat around, I guess 20 different instruments there. So they've built a big laboratory that can do whole genome sequencing, but at what margins? They're just a service company, and they talk about, well, we're going to expand margins as we scale. And well, this, tight margins now and the future having better margins promise just doesn't work so well in a bear market because they need to worry about survivability. So they have about $234 million as of the end of last quarter. They're expected to lose 110 to 115 this year. They've already lost about 56, so you can do the math. They'll exit this year with 180 million, and that should give them a runway perhaps until mid 2024. So they seem able to survive, but our concern really is around whether or not this is a business that we want to be invested in the first place. And first of all, they fail that $1 billion market cap rule, so we wouldn't invest in them for that reason. They're quite small. The key customer risk that we identified before, that's shifted. It still remains. It's gone from the VA to Natera. And then, they've launched all these products, but where's the growth? So if you look at the second quarter, so biopharma customers excluding Natera of 7.4 million for the second quarter, if we annualize that, so this is ex-VA and Natera, we get an annualized number, which is 29.6 million. Compare that to the 31.5 million in 2021. They're still not growing other customers. So that's great that they have Natera and they're going to be increasing their dependency on a single firm. And bulls might say, well, maybe Natera will step in and acquire them. That's certainly possible, though. Really, what is Natera acquiring aside from a whole bunch of equipment and expertise, which you could say an acqui-hire or whatnot that still could be worthwhile. But the point is, we don't invest based on speculations like that. Probably the biggest point of contention here is their business model. This is a services offering. It's capital intensive to scale and has weak gross margins. And we're not interested in sticking around waiting for those to improve as time goes on and hoping that they do. So that's about all we have to say about Personalis. This stock will be moved from a like to an avoid for all the reasons that we've talked about today. Please put your comments in the comment section. Make sure to click that subscribe button and share our videos with anybody that you think would benefit from them. Thanks so much for taking the time to watch this today.